I'm Clinton Griffiths. New day brings new developments in the trade war with China. The latest, China is denying it is in active negotiations with the Trump administration in the tit-for-tat over tariffs, while President Trump said yesterday that there were talks with China Thursday morning. The comments from China coming after there was talk earlier this week tariffs on Beijing's exports would come down substantially from the current 145%. AgDay's Michelle Rook joins me. Michelle, the battle between the two countries is starting to impact U.S. ag exports.
Yeah, Clinton, currently exports of U.S. agricultural goods to China have come to a screeching halt, and that showed up on this week's export sales report. So while the tit-for-tat dance between China and the U.S. is similar to 2018, the rest of this trade battle is much different, and that could make striking a deal like the Phase 1 agreement more difficult. The trade war in 2018 between the U.S. and China was ugly, but the recent escalation of tariffs makes that pale in comparison.
When you have tariffs at these levels, 145 or 125%, depending on whether it's U.S. or China, it's an embargo, and so nothing is happening.
That was evident in USDA's weekly export sales, where China was absent as a new buyer of any U.S. goods. In fact, they canceled 5,300 running bales of cotton and 12,000 metric tons of pork. And China annually accounts for about 7% of U.S. pork exports.
One of the bigger concerns with China is that what they buy is a very lower-ended type cut, a lot of offal type things. So if they are not going to buy that, it puts the packer in a tough position.
However, according to USDA data, China also buys muscle cuts of both pork and beef on a consistent basis, which has also been shut off.
The Chinese purchase roughly about 40 million pounds of pork into their of U.S. pork into the country. Also do about 40 million pounds of beef per month into the from the U.S. coming into China.
For the U.S. sorghum industry, China accounts for 80 to 90% of their exports, and they've been shut out of that market for weeks.
We have been since November. So this is newer talk right now to the other commodities, but we saw an immediate decline and purchased sorghum. So this is something we've been navigating for quite some time.
As the spat continues, the question is who will blink first and which country has the leverage. One market analyst with family ties in China says it's an even split. He says this is complex because China parts and technology go into every level of high-value ag and non-ag products in the U.S.
I think it's going to happen here. It's like, all right, yeah, we'll drop the tariffs some. And China's like, no, you have to drop all the tariffs, and there's no discussion. And China's like, I think we'll wait till the supply chain breaks.
Although while on AgriTalk, he said China's economy and political situation is different than in 2018.
They have really high inflation, and they have unemployment, and they really, really don't like their president.
However, Bassi says so far China's exports are running 10% ahead of last year, so they're selling to other customers. So he doesn't see them coming to strike a deal until that slows down.
I still think that's several months down the road, and I'm not looking for a Chinese-U.S. trade deal of any size or substance till we look at maybe the end of the third quarter, or maybe the fourth quarter of this year.
I'm Michelle Rook reporting for AgDay.